Welcome back. So, again, another trade breakdown. I actually didn't take this trade. I was watching it, but I didn't like the markets. But I want to show you a breakdown of a trade that made completely sense, but it was a little bit late and I was working out and doing my thing, so I didn't look to enter. But if you were watching the markets in the moment, you would have been, and also I would have been in the trade. So basically, yesterday was Wednesday, the 6th of May. We swept very big liquidity up here because right now we're on a different day. So if I change time frames, it's gonna be difficult to find the trade. Basically, this line up here was a 4 hour liquidity from the left, huge liquidity. It was a high that we haven't swept in days or even weeks. So there was a lot of built up, in the high. So we swept it and we started to drop down. So around this is Wednesday. So I am in Central Europe. If you are Irish or British, then take away an hour from whatever I show you at the bottom. So here's 9, which is 8 for you guys. The markets opened and they were just flying up. Made sense because we were bullish from Asia high being broken in one of these days, then breaking the highs here and just continuing bullish structure. Now, when we swept a huge bullish, bearish high. There was a sell in there. I think I did a trade breakdown. There was a sell in there down to a minimum of this liquidity. Now, this is where the market got very slow and very, very annoying, I could say. Let me see. Could I which one was it? It was this one. I want to zoom in on this area here. And if I change 5 minute, will it keep it here? Or no? Maybe. Basically, the 5 minute got swept, and then it was still playing around and being very, very slow. And we were very close to New York, which is 2 o'clock right here. And that is 1 o'clock for you guys again. Then we have this low here that got swept. So I'm going to just mark out this low up here to see what happened. Now, let's find it. It's here. Okay. Now, so basically in this moment, London was all buys. We were in this during New York. We had our liquidity sweep here during New York and we were looking for entries. Now, this looks good. You sweep New York, we are bullish, bam, take us buy. The problem is we don't have enough liquidity and we are dropping pretty heavy after a huge liquidity sweep and we've only swept like a 15-minute liquidity. We need either to slowly build up and get more confirmation that we're going to continue up or retrace rather than a 1 minute versus a 4 hour huge liquidity. Think about it like you're fighting against whatever caused the drop. What caused the drop was a huge high to be swept, and it was going down a lot. So a 1 minute, break of structure to the upside and a 1 minute POY is not exactly going to be a huge 4 hour liquidity. Even if we swept a 15-minute liquidity and a few 5 minutes, it's not going to work. But in this situation, it was looking nice because this is like a low. So the trade makes sense. But again, something is that this broke up, but this area is not the best liquidity because it's a little bit high. But it makes sense. It makes sense. It has nice fair value gap. It goes down, but this way you stay patient and you gotta wait to understand what the market is gonna do. So New York just opened and you had a nice reaction here, which let's say you took the sell and let's put it like this. You took the buy. So let's put it like this, even like this. We have taken one loss, okay, for today. We've taken one loss. All strategies are not 100% correct. So if even you had a strategy here that was very patient, a lot of confluences, you could still lose, even if it's a perfect trade. A plus setups sometimes lose. Because if people say, oh, I have an A plus setup, okay, but why are you not 100% profitable with an A plus setup? Even A plus setups have losses. So this is a valid loss after liquidity of the 15. So then we wait for what New York's doing. It goes against stop loss. So now we're waiting. We've got break up, again down, nothing is happening. Then we've got the liquidity sweep down here. We push up. You see, I've got it marked out. This liquidity, on the other hand, has no fair value gap and it's super high compared to the rise. It's like a big push and then a small little candle and a small push. Not the best liquidity, so we're not going to consider that as liquidity sweep. So we wait. Anyways, we came into this POY here and we closed pretty heavy inside of it, basically taking away the POY and saying it's not working. Then we push up and we're still playing around, playing around. So right now, our first point of liquidity would be this low still. And when we pushed up and broke structure to the upside, we could say this is the new low. So even though, they're close, you don't have to delete them. So we're still playing around. Market drops and it sweeps bottom at the same time. So let's say a double sweep, double liquidity. Then from this moment, we have our little, inverse for value gap, some reactions playing around, and then we've got the push up finally that caused the break or change of character with a POI down here. We closed inside of it, but very little, and then we've got a huge candle out. This stop loss is it's wrong here. Um, Around here. You could go a bit more aggressive because the candle is so big, but realistically the stop loss is a bit big. I don't like this trade, but a 1 to 3 would have been hit in this situation right here, and then actually I think, yeah, would have been stop loss after. So you would have hit your take profit of 1 to 3 if, or at least break even on this trade depending what kind of entry you do. Also, because we are so deep and we hit 50%, you could put stop loss under the 50%, the middle line of this candle, to be a little bit more aggressive. Then your 3 to 1 would be a little bit lower. Also, once you saw that we're pushing past this low, you could have taken it for like a 1 to 1 or trade. um, yeah, that's not exactly the best trade, but you take some, profit, and then from there, because we were so choppy and very slow on the 5 minute here, the market just kept playing around and it dropped lower and lower and lower, later resulting in a more confirmation of the 5 minute getting swept down here, the 5 minute getting reswept and break up, then again retest, and then we went up. So it was very, very slow and a very long, accumulation over here, which is not the best area to trade. So you could have just skipped this trading day altogether, but I'm just showing you that you have opportunities even if it's smaller. Like, so if you saw the chop, you entered a 1 to 2 or a 1 to 3 trade, because when markets are choppy you don't want to be aiming for big stop loss take profits. So you would have hit a 1 to 3, 1 to 2 or trade. um what I can say from this is only that, yeah, we swept liquidity here, and then 5 minute break of structure, then we reswept the liquidity, and then from that point, after sweeping a 5 minute liquidity generated within New York, which is this low right here, then when you mark out this low, which was the liquidity sweep, we never pushed below it that hard, only a little wick again, which again is not the best, because if you were looking for an entry here, maybe again 1 to 3 and then again stop loss. So very choppy markets. And then today we've got another trade recap where we swept the Asia low and 1 hour low, and then we've got the up. So that's in the next video. Yeah, this is not the best one of the not the best trade recaps, but I just wanted to show you that if you follow your rules, you can still get some profits throughout the day, or understanding and seeing that the market was choppy and slow and we didn't have any strong liquidity points or clear liquidity. So that's where you could make the decision and say, I will sit out and avoid your losses. So yes, so I'll see you in the next video. I've got a free training Discord, comment for the link, and I'll see you in the next video.